Hello to all. I'm Alexis Collomb. I'm the chair. I'm the professor of finance here, and I'm also the coordinator of the economics, finance, insurance, and banking department at CNAM. So I'm particularly happy to see you all and to see this Ethereum community conference here within our walls this year. So. I was asked to give you, a brief talk and say a few words about the sort of research that we are doing, that we're trying to do on blockchain topics. So just to give you a bit of background, I have not prepared any slides. I'll be quick, I think 10 minutes, because for short talks, I'd rather try to capture your attention, just hopefully with my voice, and not get too distracted by slides. Just to give you a bit of background, we've started a research initiative with something which is called Institut Louis Bachelier. For those of you who know, Louis Bachelier was one of the, I would say, forefathers of modern finance with his PhD dissertation, which was called Theory of Speculation, which was published actually in 1905, where, to my knowledge, he was one of the first actually to use Brownian motion and not geometric Brownian motion to model stock prices. So with the Institut Louis Bachelier, we started this partnership, which is called Blockchain Perspectives Joint Research Initiative. We have various researchers involved. One of them is Primavera, the Philippines, and many others. We have doctoral students, and we also have various sponsors. So actually, one of them is BNP, and another one we have CDC Recherche, which is like the research arm of the CDC, la Caisse des dépôts et consignations, which is a bicentenary French institution. So just to make it short, I'm just going to briefly cover where I think the interesting action is going on in, whether it's economics, finance, or insurance, and I will be happy to answer questions afterwards, especially as we fund, we have the ability to fund selected projects, if any of you happens to be interested, and that's also one of the reasons that I wanted to give this brief talk, to try to capture talent, sort of speaking. There's a nice, a great German actually writer that I like, whose name is Heinrich von Kleist, and I don't know if, I guess that few of you know who he is, but he's sort of forgotten now. But he's written a great treatise on how ideas come as you speak. So my speech is not so well prepared, and I will see. I'm going to see if it works. So within economics, just to go briefly, I think there's a talk on game theory in some other auditorium. I'm sure you've all heard of crypto economics and game theory and so forth. I think one of the great values of blockchain, and especially consensus protocols, is that it's showing again, it's sort of reviving in some respect some game theoretic aspects and giving them a sort of live experiment to study. So to the best of my knowledge, actually, there's work which is been done recently, actually published by people at the Toulouse School of Economics on stochastic games and how you can view the proof of work protocol as stochastic game, and how actually what they proved, which I find particularly interesting because you don't hear it so much, is that it can lead to multiple equilibria. Hence, there's some potential source of instability there. But one of the things that we are most interested here is really on, and particularly myself, is on monetary policy. So what I would call the, the macro aspect, really what impact blockchain is going to have on the monetary policy. And, I don't like to phrase it as a truth, because I have absolutely, for me, it's really an ongoing research. And, if I come with strong conclusions, maybe I'll give a talk in 6 months. But, for me, it's sort of clear that one of the potential weakness of cryptocurrency systems as you see them now is that there's no link to, there's usually no formal link to macro data and macro indicators. So, to make it very short, I think that when you looked at the way central banking operates and the way, for instance, the different board of governors of central banks and so forth, gather on a periodic basis to decide upon, for instance, quantitative easing and things like that. I think it's sort of trivial to say that if you look at the origins of Bitcoin and so forth, this was, precisely the thing that, one should avoid at all cost. And so, there's a lot of attractiveness, obviously, in having an automatic, programmatic monetary policy. Now, from my standpoint, one of, what I see is really lacking right now is, the connection between this sort of closed system and the real economy, and how, for instance, you could have a protocol that modulates some of the, for instance, the minting, depending upon some macro data. And, I'm working with a group actually which is advising, potential ICO, and I was asked to think about a little bit about these questions. And what we call the token economy, and for instance, if you do an ICO and the way the reserve, what is called the monetary reserve works and its program is, I think, right now a great area of research. Now, if you look at ICOs, there's also obviously things like, auctions and so forth, and, the economic literature is extremely rich with, with auction mechanisms and which has led, I think, to many interesting papers with respect to, token sale mechanisms. But, for me, the really one very interesting thing is the monetary policy. Now, another subject of research, and I've got one of my doctoral students who's working on it, and you actually may know her because it's, well, I won't mention her name, but she's working on the value of intermediation. So, I used to do a bit of trading before, and, it's always interesting to have a contrarian perspective. Most of the conference that I've attended in over, at least not so much now, but let's say, in 2016 and 2017, when I went there, I always had the sense that it was taken for granted that decentralization was a superb thing, no matter what, And so, I think it's also interesting to really understand the advantages of something, to look at also the merits of its opposite. And, so the value of intermediation and the value of centralization, or really understanding in economic terms what you gain with decentralization with respect to, centralized systems and vice versa, is, I think, another actually very interesting area of research upon which I have not read yet, to the best of my knowledge, any, any paper that I find particularly, compelling. If you look at, intermediation, if it has existed, let alone because of the, technological inability to have decentralized systems, before Satoshi Nakamoto's paper and so forth, and, the technological solutions that have been found, let's say within the last 10 years. But if you just look at the, the intermediation, it has existed because it has some degree of merits, and it has some, one of them is specialization. You know, I'm sure you've all read about, you know, you remember economic courses on, you know, Ricardo, and how, you know, economies and countries tend to specialize, and how it, you know, drives international commerce and so forth. Well, you know, intermediation, in my view, is, you know, one of its merits, and is one of its reasons is really specialization. So, you know, that I'll stop on that, but I think that's, you know, that's another great area of research, and I think understanding that really helps you understand actually what you gain by having completely, you know, decentralized systems, or, you know, partially decentralized systems. Now, you know, with respect to finance, you know, I teach a derivatives course here. I used to work, you know, in options and in derivatives before. You know, as you've probably, there's been some talks actually, and there will be, you know, throughout these 3 days, you know, by people like Variable and so forth, and, you know, I think they're doing a very interesting and great job. But, you know, there's lots of applications and research going on in finance right now. You know, obviously one of them is, you know, it's not particularly sexy sometimes for, you know, some people, because it's, you know, what is called post-trade infrastructure, or in other words, you know, the fabric of financial markets, and the, you know, the infrastructure of financial markets. So one particularly interesting area is whether we're going to be able to get rid of, you know, central clearing counterparties, and, you know, to some degree of clearing houses. Now, if we design a system from scratch using blockchains, well, you know, we'd probably be able to achieve, you know, great things. Now, the fact is that, you know, as you know, you have legacy systems with very demanding, you know, throughputs and transaction flows. And so, you know, I think the transition is, you know, if it happens, and I think, you know, I mean, there's one thing that I'm sure of, is that blockchain is having already a great impact on financial structure. What I'm not sure of is, you know, either the speed or what the end result will be 5 years from now. But anyway, you know, the subject of using, you know, the impact of blockchain on the post-trade infrastructure, you know, is really crucial, and it's sort of a low-hanging apple to work on when you work on finance, because that's you know, that's something that everybody involved in finance, you know, is more or less concerned with. There's been work, for instance, by, I think, Italian professor Massimo Morini, sorry, with who is with Banco IMI and other people. But, you know, research has been, I would expect that within the next 18 months, a lot of work should be published on the subject. Now, another, you know, also I think sort of easy area of research is corporate governance. You know, clearly, I mean, you've had talks here on, you know, voting systems and how you can have some super fine voting systems to deal with corporate governance. Well, you know, so there's been a lot of work already on this. I mean, work by people like, for instance, David Yermak at NYU. I think also Harvey Campbell from Duke, and, you know, other people have got into this topic. I mean, clearly, if blockchains end up being used massively, you know, within finance, and for all that is called, you know, securities tracking and so forth, and if they end up replacing partly or, you know, or greatly the current financial infrastructure, I mean, it should have a huge impact on corporate governance because of all the technical things that it will allow, that it should allow either treasurers or CFOs to do. You know, you just click on a button and you can, for instance, consult your shareholders and so forth, preserving the privacy of their votes and so forth. So, you know, that's another, I think, very interesting area. another area, and I won't be too long, but which I think is particularly interesting, is clearly using smart contracts for automating various things, whether it's margining for derivatives and or so forth. And so I think what I call the concept of smart security is also quite interesting. I mean, for instance, if you deal with options, I'm sure that some of you have maybe have traded options or have bought or dealt with options before. One of the central questions for an option or a convertible bond or a contingent convertible bond or any kind of equity-linked security is the question of like optimal exercise. And so if embedded within your smart contract, you had some, intelligent algorithm for, and it's fairly easy to do, for, making sure that whenever certain conditions, market conditions are met, for instance, the option is automatically exercised, and, hence the security as smart behavior, then you capture a lot of value. And if you're the investor, you don't have to deal with that aspect, which is currently dealt with actually by fund managers. So that I think I won't be I'll stop at that, but I think it's a huge field. Now the last thing that I want to mention with respect to finance, and which I think addresses more the fundamentals of finance, is the link between debt and equity. So, as you've probably maybe remember from Finance 101, or, if you look at the balance sheet of a company, you've got the assets on one side, and then, you've got the liability and equity on the other. And if you look at the way the law is currently structured fairly uniformly across, at least, certain jurisdictions, the debt is not treated as equity, clearly, and also the tax is not the same. So actually, you've all heard the Miller-Modigliani theorem, which, essentially says that the value of a firm is sort of independent of its capital structure. I think in practice, I could, exhibit a lot of things to contradict this principle. If you have 10% equity and 90% debt, you don't behave the same as a decision maker, as if you have 10% debt and 90% equity. So now you see, if you look at the liability side of the balance sheet, the way debt is structured, and you've got senior debt and junior debt and junior subordinated debt and so forth, and then you've got preferred shares and standard shares and so forth. The voting rights are typically with the equity, the economic rights as well with the equity, for instance, the dividends that you can get and so forth, and the debt is some as we know it, some straightforward liability needs to be paid back. I mean, it can get fairly complicated, but anyway, in the treatment of for instance, in the case of liquidation, the way priorities are established are fairly standard right now, but I think that there's not necessarily as much granularity as we could have. So I think actually with tokens and with the development of blockchain, we could probably potentially change that or address and make obtain a continuum of securities where you can select and play on, okay, we want voting rights and we want particular economic rights and we want certain holding periods and we want lockup periods and we want so we can sophisticate almost in a limitless fashion the sort of features that we want to attribute to the security. So I think that's from a technical standpoint, it's very interesting, but also I think from a much more fundamental standpoint, if you look at the fundamentals of corporate finance. The last area, which I think is extremely promising, and I think it's obvious to all, or maybe not, but it's the applications, the applications in insurance, and I would say the first and foremost is obviously in terms of applications, in terms of business opportunities. There, just the fact that with blockchains and the traceability that you can get on, for instance, objects of value. You can do probably amazing things that are just very hard to do now because of the huge amounts of paperwork that are involved. So this is more in I think application driven. I could give you in the Parisian space 5 or 6 startups that are very involved with insurance. But I won't be any longer. So anyway, again, if you interested in any of these topics, whether it's economics, finance, or insurance, don't hesitate to ask any question. And again, I will be available for the next few minutes, to discuss with whoever wants. That's it. Thank you.